Hello, everybody. Welcome back, you savvy business owners. Today, we're going to dive into the world of strategic tax deductions, the kind that can save coaches, consultants, and service providers buku dollars, significant amount of money. Whether you're a seasoned business owner or you're just getting started, understanding these can make a noticeable difference in your financial health. But before we get on into this nice little topic today, let me introduce myself. So, my name is Shane Harris, and around here on these social media streets, I'm also referred to as SD Negotiator, which stands for Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching service. That's what I do, and that is who I help. So today we're going to talk about strategic tax deductions, which is more savings for coaches and consultants. As you can see, it's scrolling across the screen there. So before we get into the topic, I just wanted to say, so if you're on my YouTube channel, or if you're not there, you're catching this on Facebook or wherever that you're catching it, go to my YouTube channel and look underneath the pathway playlist. And there has been several weeks of content that I have put out there for you business owners so that you can win. So there's lots of information on taxes, accounting, and some business strategies that are there. Go back and look at that playlist to catch some of those previous recordings and lives that I have made to help you in your business. So now those 8 weeks ended, and now we're going to continue with about 8 to 9 more weeks, because that's where it's left in this year. This year is about to be over, and I'm trying to give you guys jam-packed information. So come January, you can start implementing and rolling some of these things into your business model, your business plans, whatever you need to do for your business, so that throughout the year you can be set in your business. So go back and watch those previous videos and lives that I made. We talked about bookkeeping, we talked about taxes, we talked about CEOs and CFOs and all that good stuff that we talked about. And now we're going to continue through the rest of the year with some more tips that I have put together for you guys. So let's go ahead and continue on with today's topic. So we're going to go into understanding tax deductions. So tax deductions are expenses that the IRS allows you to subtract from your total income, thereby reducing the amount of income that you're taxed on. So I'm going to say it again. Tax deductions are expenses that Uncle Sam allow you to subtract from your total income, that allows you to reduce the amount of income that you're taxed on. So for coaches and consultants, this could mean a range of expenses from educational materials to home office costs. It's very crucial not to overlook these, as they can substantially decrease your tax liabilities. So I'm going to give an example of that. Let's say you made $200,000 in your business, and the allowable expenses the IRS allow you to write off is $100,000 you wrote off. So now 200K minus 100K in those allowable expenses, you now are taxed on 100,000. That is your taxable income, not that 200,000 that you have made throughout your business. After those expenses that the IRS allow you to write off, you are taxed on the remaining amount. Of course, there's other things that you can deduct and subtract and write off, but for this particular example, that's what I'm giving you. Okay, so let's go on to some of those common missed deductions. So listen up, come on in closer, you coaches, consultants, and service providers, because these expenses, a lot of you are missing out on these deductions, and I want you to win. So we're going to talk about the common missed deductions. So the first one out the gate is the home office expense. So if you use a portion of your home exclusively for business, you can deduct those expenses like your mortgage interest, your insurance, utilities, portions of a proportion to the space that you are using. Second, educational materials like books, courses, webinars, anything that enhance your skills can be deductible. Third, software subscriptions. The tools you use for scheduling, invoicing, or project management are also deductible. So let's go on up back to that home office expense. So that home office expense, you can write off portion of your home that you use exclusively for business, and it's a proportion of it based on the total square foot of your home. And I'm going to go and give an example of that in a minute. I just wanted to really hit that again because a lot of you guys are missing out on this home office expense. It's like getting your rent paid for free or your mortgage paid for free. Not really free, but you're getting it back in one way or the other. That's what it's like. It's like living for free, in smaller portions. And I like free money. I know you guys like free money too. So I want to keep hitting and stressing on this home office expense because many of you are still doing your own taxes. You know who you are, and it's okay if you want to do your own taxes, but I'm letting you know you are leaving money on the table when you do your own taxes. And that home office expense is usually a big one that many of you coaches, consultants, and service providers are usually letting it flap in the wind. It's just out here and you missing out on some funds. And I'm going to give some examples of what that can look like if you have a mortgage or you're paying rent in a bit. So those books, the courses, the webinars, anything that enhances your skills can be deductible. And just enhancing your skills, like, you're going to these webinars, you're like, so when I have my webinars and I say, hey, I have this webinar or I have this live event or whatever it is that I have going on, and you guys don't want to pay for it, even if you do pay for it, it's deductible. You're going to write it off anyway. So why not go ahead and invest into these things? And it's just not just me. It can be for anybody else that's out here that's having these webinars and these courses and the books and these materials that can enhance you in your business. Why not invest in it if it's going to help? You can write it off anyway. It's not like you're losing any money. You write it off. And we talk about those softwares and those subscriptions. So the tools that you're using for those scheduling. So we use appointments. I use OneTub. There's a lot of people using Acuity. A lot of you are using Calendly, though that's a big one. You write that off. That stuff is written off anyways. You have subscriptions. Like if you're using Apple and you're using some of those apps on Apple, you can write those subscriptions off. Now, not all of them. Now, you can't write off Netflix if you got a coaching and consulting business. So unless you letting your clients watch some Netflix and they come into your office, you can't write off Netflix. But like, for instance, I have a meditation app on my phone. I can write that off because sometimes in the middle of my day, I got to get my Zen right so that I can continue working. So that's write-offable. I just made that up. You can write that off because it's a part of my business growth. If my mind is not right, Shane is not right. So I'm going to write that off. Okay. So that's just an example of some of those softwares and things like that. And of course, the tools and project management. So I know I talked about in previous videos that I have made where I talked about some of the project management out there. And I mentioned Trello. I mentioned Monday and Asana. Those were some of the ones that I mentioned. That's a part of project management. You write that off. You write it off. So I'm going to give you a real life example. So I have one of my clients, Jamie. Jamie, she's a life coach. And she didn't realize, and it's not just her, it's most of the clients that I get. If you have not worked with me before, usually if somebody has come to me for the very first time, this is their scenario. They did not realize that the portion of her internet bill used for her coaching sessions could be deductible. She didn't know that. And many of you don't know that either. By calculating her home office space percentage, she saved hundreds. And I have others who have saved thousands on her tax bill, on their tax bill. Then I got Mike. Mike is a marketing consultant who attended several online workshops every year. He attended it because he wants to improve his business, he wants to improve himself, and he wants to give more value add to his team members. So he attends these workshops throughout the year. And he missed out on claiming them. He did not claim them in the previous year. Why? I'm putting you out there, Mike. Mike did not hire a professional. He didn't come see Shane, the negotiator. He did it himself. So when he came to me, because he's like, you know what? I've been watching some of your videos out there, so I decided to come to you so I can get my taxes done. So when I explained to him and talked to him about some of these, he was just like, wow, I did not know that. Of course not. You're not expected to know these things unless you are in this profession. You may not be expected to know a lot of these things. So see the professionals. So he did not realize that he had missed out. So he had two choices. We can do an amendment on the other ones that the previous 2 years that he filed on his own and he missed those. We can do an amendment, or he can just eat that as a loss. And moving forward, let Shane the negotiator hook him up so that this doesn't happen again. So once he did, his taxable income lowered significantly. So once we actually put everything up in there and calculations and add this and subtract that and did all the math, oh, that math was mathing correctly, and he lowered his tax bill significantly. Now, how many of you would like to lower your tax bill just by implementing some of these strategies right here? I know your hand should be going like this real fast because I know you want to lower your tax bill as well. So maximizing deductions legally. There's not no shady, nothing going on over here. It's all legal, but you're going to get the most for your bucks over here. So it's not just about knowing these deductions, it's about maximizing them. So for instance, if you're traveling for a conference, you can also deduct expenses like your lodging and your meals. So those hotel accommodations and your meals. Now, that is a big now. If you are going to one of those conferences and you're going there as a speaker or you're a host or something like that, because many of us do get invited to do speaking engagements in different places, the other companies may pay for your lodging. So if they're paying for your lodging, you can't go write that lodging off because you didn't actually pay for it. And I needed to put that in there because you guys come and you ask me, you be in my DMs or you be on my consultations and you be like, well, the company paid for it, but I still went. So can I write it off? No, that's double dipping. And you didn't actually pay for it. You have to pay to write it off. If you didn't pay for it, you can't write it off. Okay. So again, so like the lodging and your meals. However, remember the primary purpose of the trip, it has to be business related. So you can't just go on out there and be like, oh, I'm going over here to XYZ to Florida and I'm taking the whole family with me. We going to Disney and we going to over there because we want to go to Busch Gardens. We gonna go over there to Tampa. We gonna shoot it down in Miami. We gonna go to Daytona. We gonna do all this fancy stuff in Florida, and we gonna just have the business write it off. No, you can't do that. Was it business related? If the answer to that is no, then you cannot write that off. So it has to be business related. So you got what you have to do. You have to keep clear records and receipts. Now that's the other part that you guys be messing up. You don't like keeping those receipts and you don't like bookkeeping. You got to have that bookkeeping. So you have to keep those records. You have to keep the receipts because when uncle come knock on that door, hello, I need to see your records. You need to show the claims to show that this is legit. These deductions and these credits that you're taking is legit. The IRS want to see that. So if you don't have the proof is in the pudding. If you don't have those receipts and you don't have the proper documentation, IRS going to say, no ma'am, no sir, you can't write none of that off. And then you won't be able to lower your taxes, your tax bill. So remember that. If you don't remember nothing else I say, receipts, keep your receipts, keep accurate records, and it has to be business related. Those are only three things you need to know, okay? So let's go into specific strategies for coaches and consultants. So as a coach, consultants, and service providers, think about continuing education. So client engagement tools or even a portion of your phone bill if you use it for your primary business. So these specific strategies can help you leverage the full spectrum of deductions available to you. And we're going to go into some examples of that. So let's go into what this would kind of look like. So it has to be, like I said, exclusively for business. So I get this question a lot. Well, I have my living room, and in my living room, I use that for business. That is my office. Can my living room be my home office? Yes and no. Yes, it can, and no, it may not. So if you are by yourself, you're a single person, I'm just giving this is the fictitious scenario. You by yourself, you work a lot. You don't use your living room for anything except work. Anytime you're in your living room, you're on the computer, you're on your laptop, you're on a phone call, business related. Your living room is your office. You're only using your living room for business. You are not hanging out there on a Saturday night or on a Tuesday afternoon watching Netflix and chill. The old fashioned Netflix and chill, not this new school Netflix and chill I'm talking about. Even though if you want to do that, then you can. But if you're doing anything but business related in your office, in your living room, it's not exclusively. Now, if you have family of six, it's you and a couple of your husband or your wife and a couple of kids or your partner or whatever, it's going to be hard to prove to the IRS your living room is exclusively for your office because you have to prove that your children don't be in there watching cartoons and things like that. Are they in there watching Five Nights at Freddy's? You know, you have to prove that your living room is 100% exclusively. No other members of your family is using your living room. Now, it's easier to prove that if you're by yourself because you can probably prove that, but it's going to be harder to prove with a family. So that's why I said yes and no, because your living room is the hangout spot generally. Now, it can be business related if it's exclusive. But if you have a big family, it's going to be hard to prove. So I said yes and no. So find a space, get a extra home room in your house, kick one of them kids out, let them share with their cousin and them, and you make their room your home office because then it's going to be exclusively and you can write off that portion. So for instance, this is my home office right here. So whichever you can see on the camera, this is only used for business. I don't come hang around here on a Saturday and lay on this couch and watch TV. If I'm on this couch is when I'm on my break. Like when the lights go out and if I want to take a break or I need to sit here and do my little 15 or 20-minute meditation and then I'm going to get back to work. It's still business related because I'm trying to get my mind right so I can get back to work, so I can get back into making a video. I can go see one of my clients, to write some emails, whatever. It's considered business related. But if I'm hanging out here on the weekends, watching TV with my feet up and I'm not doing business, and it's not exclusively for business, now is it? Okay, so let's go in this. So a portion you can write off based on the percentage of it that is related to business. So for instance, let's say your house is 300 square feet. You got a nice, decent size house, 3,000 square foot. And I'm going to use the size of my office for this example. So let's say your house is 3,000 square feet and your office space is the same as my office space. So my office space, the size is about 20.2 by 11.5 square feet. So you put that together, multiply that, that's 232.3 square foot. That is my office. So let's just say we went with the 3,000 square foot and my office is 232. Let's just make it 232 square foot. I can write off 232 square feet of my house. So my sunroom, I also use that for business. Sometimes I do photos, I do videos, I use it for business. So that one is 20 by 8. So that's 160 square feet. So you put it together. So between my office and the sunroom, it's around 392 square feet. Now, I'm only going to use my office because right now, because I have to do some subtractions when I calculate my sunroom because my sunroom is not 100% for business. So I usually have to do a different calculation to get that. So I'm just giving you the examples because as a professional, we can help you with these calculations. You as the individual, you don't know nothing about these calculations. So you may have your living room and a portion of it you're using. It's not exclusively, but you can write off some of it, but you may not know how to do those calculations. So don't mess with it by doing it yourself because you're going to mess it up. So for this example, we got 3,000 square foot because that's the size of your house. And we're going to use the size of my office space, 232 square feet. So the percentage for that, 3,000 divided by 232 square feet, we get 12.9%. That is how much of my office, of my home, I can write off and take a deduction for. So we're going to just round it up to make it 13% to make the math a little bit easier. Okay, so now my mortgage. Let's say my mortgage is $1,500 a month. And it roughly is around $1,500 a month. We're going to multiply that by 12. So for 12 months, if your mortgage is $1,500 a month, after 12 months, that's $18,000 that you spent in a year. So you're going to take that $18,000 in your mortgage or your rent and multiply it by 13%. So 13% from that 18,000 is $2,340. So $2,340. So that $2,340, that's deductible. So I can subtract that as an expense from my income to lower my taxable income. So let's go into the phone. Let's go to phone now. So I got two phones over here, two phones. So one is the Profit First Taxes / Self Before Abundance. It's 100% business related. No personal calls on this phone. Always business. This other phone is my personal phone. So I use this, but I also use this for business. So I use it 20% personal. The other 80% is business. Why? Because I have several businesses. So I have Airbnb, I do Turo, I do other businesses. And of course, I still use it for Profit First Taxes and Self Before Abundance, because when I'm scheduling my posts or if I'm on social media posting a lot of the times, I'm using this phone. Sometimes I have clients who are my friends and family. They'll call me. They won't call this business phone. They will call the personal phone, and we're going to talk about taxes or accounting and things like that. So I'm using my phone for business also. So I can't write off 100% of this phone. I can write off 100% of this phone. So this phone goes into the business expenses. This doesn't go with the home office expense because the business writes this off 100%. This phone, because I'm using it in my home office and I'm using it for business, I can write off 80% of this phone because I use 80% of it for business related activities. The other 20%, I'm chopping it up, talking about nothing. Okay. So let's just say the phone bill is $150 per month, roughly. So after 12 months, that's $1,800. $1,800 is my phone bill for this phone. Remember, I'm using 80% for business. So 1,800 times 80% is $1,440, $1,440. So now we're going to go into the utilities. You got utilities in your home, right? So for me in the state of Georgia, we got water, we got electric, we got gas, and then I got trash. It's trash. So my trash. So I just went ahead and I wrote down 600 a month. I just made up a number. I didn't actually go and calculate. I just threw a number together. 600 a month. You may have other utilities in there. You may have electric. You may not have gas. You may have gas. You may not have electric. Whatever. It doesn't matter. So $600 a month, I'm lumping that together. So after 12 months, that's roughly $7,200 for utilities. So remember, your home office is 13%. Remember that number, right? So $7,200 times 13%, that's $936. Okay. So now we're going to take that $2,340 for the mortgage or the rent. We're going to take that $1,440, and that was from, what was the $1,440 from? Oh, that was from the phone. And then the $960, which was from not the phone. The phone, yes, the phone. And the $960 was the utilities. I'm here confused. I wrote it down so I don't forget, and I'm still forgetting them. So we're going to take those three numbers and add them up. We get $4,716. So $4,716, that is how much I can deduct from as expenses from because of my home office expense. So imagine if your mortgage or your rent and your mortgage interest, and I didn't even add mortgage interest. These are just simplest numbers I just grabbed together. So imagine adding those other things. And some of you are paying like $2,500 a month. Some people might pay $3,000. I'll be paying $5,000 because you up there with the Joneses, you rocking with the Joneses. I'm not with the Joneses yet. So I don't have those high numbers, nor do I want them. However, imagine paying those higher numbers, and instead of $4,716, add a zero to that and make that $47,000. Imagine that. Okay. So that is what I would be a portion of that I'll be able to write off on my mortgage. When I file my taxes. Now there's a caveat to that. This applies to if you are a sole proprietor, meaning you are running your business as a you're just your EIN, and or your social. You may be 1099, you're a contractor and you have a business, that's a sole proprietor. You can be a single member LLC. This would also apply to you. Now, if you are a corporation, your C Corp, your S Corp, this does not apply to you. And I wanted to make sure that I say this because you are not allowed to take the home office expense as a corporation. It doesn't exist for you. You can do this in a different way. It's called having an accountable plan, and you will do this by having an employee reimbursement plan for your business. I will do another video at another time that's going to go into details with that, but it's not going to be today. So I just wanted to put that out there because many of you do have S corporations as the going thing is very favorable for coaches, consultants, and service-based businesses. S corps are very favorable. The home office expense, what I'm just explaining, does not apply to you. Don't listen to none of this. It will apply a different way through the accountable plan. And I'll do another video for that. I'll probably do a quick short on that and to explain it. So that's pretty much in a nutshell how you would deduct your home office expense on your taxes. So I hope that made somewhat sense for you. And if you need more clarification on that, drop it in the comment and I'll be able to, explain a little bit more, or you can click the link and schedule some time with me, sit with me, and I'll be able to get into more details on this stuff as well. So key takeaways. So the key takeaway is know your expenses. You have to keep meticulous records. Those records need to be on point. And don't forget to consider the scope of your business activities when you're looking for those deductions. Consult with a tax professional if you're unsure. It's better to be safe than to be sorry. Now, you can continue to do this yourself because many of you are going to be like, oh, I can do that myself. I'm going to do it myself. Oh, Shane, I learned on YouTube. Shane told me on Facebook how to do the home office expense. I don't need nobody. I'm going to do it myself. Proceed at your own risk. Seek a professional. Sit with a professional. If you are a business and you are planning to continue to scale your business to infinity and beyond, get into the habit of sitting with a professional and let them help you the right way. You are not, no matter how good you think you are, you're going to be missing some things. Sit with a professional. Stop doing it yourself. Stop being small time. Think about the big time. You rolling with the big boys now, and the big boys and the big girls. You want to be that boss chick and you the boss this body? Well, be a boss and hire the professionals and stop doing it yourself. You're missing out on a lot of money out there. Missing out on so much. Okay? So to wrap this all up, let's get into the conclude. To wrap it up, tax deductions are a powerful way to reduce your taxable income and keep money in your pockets. So leverage them, but always stay within the guidelines of the IRS. Now, there's going to be so many videos out there. There's so many people talking. And as I say, you hear snippets of things. You might watch a 30-second short or a 60-second short or a reel, wherever you're watching it on, and it's going to give you a little bit of snippet on something that you can be doing. You'll be like, oh, Bert, I can go do that. But it's always more behind what that person said. There's always more. So you want to get with a professional so that you are making sure that you are within the guidelines. Now, there are some professionals that are out there that is not within the guidelines. They're going to do what they need to do to get you a big refund. And I'm here to tell you, I don't care what those other people say. When you are a business owner, the goal is not to get a refund. Yep, I'm saying it. The goal is not to get a big refund. The goal is to use your money wisely throughout the year, strategically, so that you can pay the exact amount of taxes that you need to pay, nothing more and nothing less, and not have to get a big refund. A big refund means you pay too much taxes. If you have to pay taxes, it means you didn't pay enough taxes. So you want to pay just enough. Make IRS happy, leave you alone. If you get a couple dollars back, great. If you owe a couple dollars, no biggie. But if you're getting back 5K, 10K, 15K, You pay way too much in taxes. You know what you could do with that money throughout the year. I'm going to tell you what you can do with that extra money throughout the year, but you got to come back and subscribe to my channel, because in a couple of weeks, I'm going to tell you what you need to do with that extra money throughout the year so that you're not getting that big refund. You're not an earned income client, EITC. You have like 10 kids and you're getting all these big refunds, and you're on public assistance, and it's not for everybody this applies to. I'm speaking to people who are getting those large refunds. If you are not in those categories, you should not be getting a large refund. Strategically pay what you need to pay. Use the rest of the money in other areas within your business. And I'm going to teach you how to do that in the upcoming weeks. Do not expect to get a huge refund come when you file your taxes. Do not do that. You're thinking too small. Stop thinking so small. So I just wanted to put that out there, because you don't hear a lot of people saying this, but you're hearing it from Shane. I don't expect a huge refund. And I got a huge refund last tax season because I did some stuff to my home. I have Airbnb, some other things. So I did get some monies back because I was able to write off a lot of things that I generally don't write off. So that was a special situation, and I was expecting that. So I didn't pay a whole lot of taxes, but I still got a huge refund because of some of the things that I had to write off. But I don't ever expect to get a huge refund because I pay exactly what I need to pay. I teach my clients and I show my clients and I help my clients to pay exactly what they need to pay, nothing more, nothing less. Don't come here ashamed to negotiate, expecting to get 7-8K back from business taxes only. Don't do that, because that is the wrong way to go. So I hope that sinks. I hope you get that. And if you need me to explain it even more, click that link. Matter of fact, let me drop that link right now so that you can see it. It's scrolling across the screen. There it is. Click that link, go in there and schedule some time with me so I can explain to you why you don't need to be getting a big refund every single year if this doesn't make any sense to you. So stay tuned for our next session, where we'll be pivot to managing your business expenses with finesse. Yes, nice and smooth. Ever wonder if there's a smarter way to handle your expenses and not only keep you tax compliant and financially robust? Well, we'll cover it in smart expense tracking. Manage your spending like a pro. And that is the next one coming up. So you do not want to miss that. So thank you for tuning in. And remember, it's not just about earning money, but also about keeping it. So until next time, keep thriving and drive your business forward with smart tax strategies. And I will see you on the next one.